Guys, how we doing? I'm Ryan Mac. Welcome back to the trading, guys. I'm trying to keep my voice down today because my son's still sleeping, so I'll keep the mic close to me. This here it's still being updated, but you know, a lot of the time I always use Prime Market Terminal. I don't include it in every video because it takes up so much time, right? However, they are going through an update just now. They are updating absolutely everything on here. What I've also done today is I've went on to my settings and I've made the display 150% more, right? I actually hate looking at my screen when it's 150. I like 125. However, I've got one of those like huge meter long screens, the big long curved screen. So that's why when you guys are maybe watching on a smaller laptop or an iPad, you're kind of like, what the fuck is that? I can't see it, you know? And I don't know why that is, because when I watch the videos back on my iPhone, I can see it perfectly fine. But some people do say in the comments, oh, I can't see the screen, it's too small. I don't know why that is. So what I've done is, like I said, I've zoomed the screen into 150%, okay? So hopefully you can see this a lot more clearer. This is Prime Market Terminal. Phenomenal bit of kit. It is an aid, okay? It does give you a lot of help in the market. There is nothing in the market that's going to make everything, oh wow, this is the holy grail, you know, this is all I need, and all of a sudden I'm just going to make fucking tons of money. There's really nothing like that in the markets. The only thing that gives you that in the markets is fucking hard work, a lot of study time, learning what actually makes the market move, and practicing it. And you know, even if you're using a demo account, you'll go on a lot of these Instagram pages and they'll be, yeah, but you're only trading demo. Listen, see, when you're fucking starting out, use a fucking demo account. Yes, I understand there's no emotion in a demo account, right? And what a lot of people find is they will do very well on a demo account. They'll be like, fucking hell, I've just doubled that account. That's amazing. They'll jump onto a live account and they'll be like, oh my god, how the fuck did I just blow my account there? I've doubled the demo, but when I go into live, I've blown it. Well, it's because your behavior isn't the same on a live account as it is in a demo. When you take a demo trade, you have this very relaxed, blasé attitude of, yeah, just fuck it. I'll place a trade and I'll watch how it plays out. Just let's see what happens, right? Which is the same attitude you should have on a live account. But you won't have that unless you consciously make it so, right? And I've been there myself. I'm saying this from like past life reflections when I was starting out. And I would do the same thing. And I was like, why am I not getting this? Why come every time I go on a demo account, I smash it and I do amazing, but the minute I go into live, you know, it fucks me up. And then you start blaming, oh, the market makers, they can see where my stop loss is, they keep hitting me out. No, a market maker doesn't give a shit about your $50 stop loss, right? For the market to move 1 pip requires $100 million, right? If every single retail trader on the planet had a large enough account that they could have a $2 million stop loss, we still wouldn't, and we all took a trade at the same time, we still wouldn't inject enough money to make the market move, right? This is what people don't get. So thinking, and I used to think that, you know, back in the day when you don't know any better, thinking that a market maker is coming back, stopping out your $100 or $50 or whatever it is you're risking, and then he's making the market fly. In order for him to fucking pull that market down there, he's having to put in billions upon billions of dollars, right? If it's a 10 pip move in a candle, that's $1 billion. If it's 17 pips, that's 1.7 billion, right? So he ain't moving the market $1.7 billion to grab your 50 fucking bucks, all right? The reason why you're doing good on demo and fucking shit on live, it's emotion, right? It's, you're not controlling up here. So this is why making a journal, a trading journal, is actually very important, because you can write down the pair that you were in. Did I take a buy? Did I take a sell? Did it hit my stop loss? Did it hit my take profit? Did I cut it too early? And then have remarks. So you can write in the remarks, well, actually, this was a losing trade. Why was it a losing trade? Well, it was a losing trade because I went into drawdown and I cut the trade at a loss to try and, preserve my capital and keep my losses small. And then 2 minutes after I closed the trade at a loss, it started flying. So you can start, and then when you write a journal and you keep reading the remarks and you're like, you look over 10, 20, 30 trades and you'll be like, fucking hell, it's me. Every time the trade goes into drawdown, I'm cutting the trade to try and, keep my losses small. And fucking, 80% of these ended up being winning trades if I had just left it. It would, yes, it pulled back, but it would never have come down to my stop loss. It would have hit my take profit. It went past my take profit. All these different things. So this is why it's extremely important to write down a trading journal, because you can learn so much from it. Relying on remembering, oh yeah, I remember that trade, what happened, that's just fucking nonsense. My old boss, when I worked for the trading company over in the office in the city centre there, he used to always say to me, the faintest of inks is greater than the best of memories, right? The faintest of inks is greater than the best of memories. So basically what he's saying is, write it fucking down. Right, and then you can review it and you'll never forget it, and you'll always go back, oh yeah, that was right, I remember that. So it's very important and it will help you. Now, if you can go into a live account and you say, right, do you know what, I'm going to risk 0.5% per trade or 1% per trade or whatever, right? Keep it low, keep it small. Excuse me. I'm going to put my stop loss here. I'm going to put my take profit there. And that trade is going to do one of two fucking things. It's either going to hit my stop loss or it's going to hit my take profit. That is it. I'm not closing the trade early, whether it's in profit. I'm not closing the trade early if it's in drawdown. I'm just going to, I'm going to let the trade play out. My stop loss is in a good location. My take profit is in a good location. This trade is going to do one of two things. It's going to hit my fucking stop loss and I'm going to have a 1% loss or a 0.5% loss, whatever. Or it's going to hit my take profit and I'm going to be up 3%, 2% or whatever you've sent. Pardon me. So that's the way you have to start doing it, and monitor that and write all of that down, and you will see over the course of 10, 15, 20 trades, you'll actually be like, fucking hell, my system actually works. It doesn't mean you're not going to have losing trades, of course you are, but you'll see overall that the system works. I think I'm going to show you this here. On our trading group, we have trading psychology stuff in here, right? A lot of it's some stuff I've put in, some stuff I've put in from very well-known traders. Mark Douglas, trading psychology. Dr. David Paul, right? I think he's passed away now. Excuse me. But his videos are fantastic. If it loads up his face, it's not loading. Where is his face? I'll show you him. You'll know him right away when I show you him here. You'll be like, oh, fuck, I know who that is. Oh well. The one video that's not showing is him. Okay, that's fine. Anyway, you'll know who it is, Dr. David Paul. He's an ex-Royal Marine officer, really good trader. What he says in one of his videos, it might even be this video, right, is that most traders who already have a proven strategy, so if you copy my strategy, it's already fucking proven, guys. I'm telling you, I show you it every time. Even if you're just marking up your charts when I do this weekly review, you will see that it comes back and it hits every fucking time. It's insane. So what he says is most traders are only 10 trades away from having the confidence to actually be like, right, I can actually trade now. Now, I know in reality you want to be doing, 50 to 100 trades to really test out your strategy. I know that. But I'm just saying, to give you the confidence to get to 50 to 100 to 200 trades consistently, you're only 10 trades away. And what happens is most people will do one trade like I just mentioned. Okay, you go into the trade, you say, it's going to hit my stop loss, it's going to hit my take profit, and that's it, right? You might do that for one or two trades, and as it comes in, you'll be like, yeah. And honest to God, see by the third or fourth trade, you've already went back to your old fucking mentality and you've ignored what you said you were going to do for the next 10 trades. Because let's say you have 2 or 3 losing trades, right, in a row by doing that. It's very easy for you to go, oh, fucking hell, I keep losing, right? I'm just going to start cutting my losses early and closing my wins when I'm in profit. And you just go straight back to that mentality. Just allow yourself to get through 10 fucking trades. even on a demo account, and stick to your guns. No matter what happens, this is what I'm going to do for the next 10 trades. And if they all come in and they're all fucked, then your strategy just simply doesn't work, right? And then you know that it's something else. You know at that point that it's not your psychology and your emotional response which is causing you to lose and not make money, right? You'll know that it is something to do with your strategy that isn't quite working, right? It could even be that your strategy works, but you're putting your stop losses too tight, so you're not giving it enough breathing space, you're not putting it in the correct areas, and so on and so forth, and these little things that you take into consideration. It might be that you're setting your stop loss based on the 30-minute time frame, but if you look at the 4-hour time frame, it's like, my stop loss is here, but there's actually an area here where the market's probably going to come back to before it runs, so you could wait. You know, there's all these little things that you could then tweak to your strategy to get it up and going. But this is great, guys. You'll notice up here, they've already included in the new Prime Market Terminal a risk on, risk off sentiment. Look, market sentiment weak, risk off. So it's fucking brilliant. So when it's risk off, you're looking to buy CHF, Japanese yen, NZD, gold, silver, and so on, right? You've had an insane week on gold and silver. Let's have a look. What else we got in here? I've also got COT here as well. So this comes up with loads of stuff here. Look, COT, which is commitment of traders. This tells you what the banks are in. So AUD CHF, look, I'm actually in a buy, right? A swing trade buy in AUD CHF. I'm going to hold it for a good couple of weeks. I might even hold it to March or April, right? It's a long term. So look, you can see here, all the big institutions are in buys. The reason why you'll see a smaller percentage in sales, right, is because institutions trade differently from us. Let's say we have an account, we will trade 1% of that account per trade, right? Institutions don't do that. They trade every single fucking penny that's in their pot, but they hedge it, so they'll spread out and diversify it. So let's say they entered AUD CHF and they believe, right, this is definitely buys. What they'll do is they'll put like 80% of their portfolio into the buy, but they'll put 20% into the sell. So they've already written off that 20%, and that's a little safe haven, because if you look, I'll give you an example on gold, right? Excuse me. Gold. Look, look at that. If you had entered, let's say you had entered 80% of your position as a buy here, right, and it's went up, you think, well, happy days, and 20% of your position in a sell, and it melts all the way down, you've actually made back the money that you lost from the buy, and you've kept yourself in the game to then go through that again, right? So they do, it's called hedging. I don't really recommend you do that, because you just won't have enough funds, and it's very fucking stressful, and so on and so forth. But this is why I'm just explaining to you why this says, you know, so many are in buys, so many are in sales. It's because they have a little protection. They put all their money in at the same time. If we come across here to DMX, move that. DMX is Dumb Money Index, which is retail traders. Retail traders are predominantly in sales. Now that's fucking fantastic. Why? Because retail traders are always wrong, and retail traders provide the liquidity for institutional traders, right? So you want to be in line with institutions, and you want to be against retail traders, because most of them don't know what they're talking about. This is fairly 50-50. However, their net sentiment is bearish, right? If we look at COT, they are massively bullish, right? So if all the banks and big institutions are bullish, why would you want to go against them? That's fucking suicidal, right? So that's why I love this tool, Prime Market Terminal. It's amazing. If you can go in like a monthly subscription if you want it. I have a link down the bottom. My link also includes, I think it's a 15% discount you get as well. If you like it, it's in the description. It's always there. I think you just scroll down the bottom, it will say Prime Market Terminal. They have a macro AI. This is pretty amazing. You can ask this any question you wish based on AI, and it will even tell you, look, sources used. So it will give you a bunch of information as to why your pair is seen to be going bullish over the next couple of months, and this, that, the other. And it will show you here the sources that it used, so you know that it's not just plucking it out of its arse, it's genuine information, alright? I just think it's a fucking great piece of kit. We've also got the news here, so look, you know how we've got, your forex factory and trading economics. This has already got it. This has already got it built in, right? So you've already got all your news here as well. Phenomenal piece of kit. I just love it. All right. So, where are we? 15 minutes. Okay, well, let's get cracking. What I'm going to do now is I'm going to run through this really quickly. I'm not going to explain this, that, the other. I know I do that in some videos. This one I won't. We're going to go through fundamentals extremely quickly. Then I'm going to jump across and we're going to have a look at any potential markups, all right, for trades. So, as always, guys, get your notepad out and you are going to write, where are we? Currency strength, then you're going to write strong on the left, weak in the center, and neutral at the end, okay? Now, as I always say, I know logically you would think it's strong, neutral, and weak. The reason why we do strong, weak, and then neutral is because that's how you choose what you're going to be looking to trade this week. You match up a strong economy with a weak economy. That's what's going to give you an uptrend or a downtrend. If you do neutral to weak, weak to neutral, neutral to neutral, strong to strong, strong to neutral, it gives you this kind of range. But if you have two that are have two massive discrepancies, one's massively strong, one's massively bearish, weak, then you're going to get a massive uptrend or a massive downtrend. Based on real data, not based on drawing a stupid fucking line in your page and be like, well, if it passes my line, I'm going to enter. No, that's not how markets work. This is how markets work, okay? And I used to be one of those guys, so I'm not. If you're one of those guys feeling a little bit butthurt right now, I'm sharing all this information because I used to be one of you. I used to always be like, for years, I was like, I don't need to learn fundamentals. I make more than enough money trading lines on my page. And one day I just said, how am I going to get better at trading? What can I do to advance to the next level? Because I seem to be at a kind of plateau. And I was like, well, what's the only thing I haven't bothered learning? And it was fucking fundamentals. So I thought, you know what? I'm going to pay for 2 top courses on fundamentals. And that's what I did. And honest to God, I was eating humble pie. After about week 2 or 3 on the course, I was just like, how the fuck have I been trading for all these years and not looking at this, you know? I just felt like such a fucking idiot. But it's one of those things, you don't know what you don't know, right? And because I was making money just using technical analysis and not taking into this account, you get that kind of ego rush, don't you? Oh, I don't need it, I'm already making money. But the truth is, we can always improve. Even right now, I can still get better, you know? We can always improve. The SAS have a saying, it's the relentless pursuit of excellence. And the reason why they say that is because they already know we will never, ever be perfect. It's impossible to be perfect. It's impossible to be the top of your game at anything, right? And the SAS also understand this. The relentless pursuit of excellence. Because when you think you are at the top of your game, something else will come out that you need to learn, which will then make you even better. So you're just constantly pursuing this excellence, which you're never going to reach, right? It's just one of those things. And we as traders, we can always be improving. We can always get more knowledgeable. We can always fix our shaky mindsets and so on and so forth, okay? So let's get to it. As always, I do each currency pair individually, apart from AUD, China, and NZD, and that's because they're all closely correlated. So, like I always explain that. Let's just fucking fly through this. 31, okay. So, pardon me. I'm not sick, by the way. I live in Jakarta, and the pollution here is horrendous. Like, people wear masks and all that walking around, and so everyone's got like a shitty little cough. But I do always get checked every year. I go for a full medical, and my lungs are fine. The minute I go to the mountains, I'm also fine in the clean air. It's just like it irritates your throat. So, and I do have air purifiers at home, which makes it better. Right, let's have a look. Let's see. Business confidence has increased. Credit card spending year on year is massively down. So that would be seen as a negative. If credit card spending is down, that means people aren't spending money. If people aren't spending money, it means they're not stimulating the economy, right? So that's a negative. So anyway, NZD, bearish. CPI month on month, bullish, bullish, bearish. But they're month on month, all of them, so we don't really care. We look at it, but we don't really care. Trade balance, bullish. Bearish, bullish, bearish, bullish, bearish, bearish. Okay. So it's a bit of mixed data there. This week coming up, we have got commodity prices year on year. We want to see that. Cash rate. AUD are looking to increase rates. Okay. So again, bullish. It's because all AUD is doing really well right now. They're doing well off the back of China's production, etc. So they're looking to increase rates, right? So, excuse me. So here's the thing, right? If people always say that rate hikes are bullish, rate cuts are bearish, well, that's only true if it's a surprise. This has already been preempted. So if this comes in at 385, then nothing will really happen to the market because they already priced that in ages ago, right? But if this comes in at 4.00, that's a surprise that the market wasn't expecting. That will give a large bullish move. It will give, as soon as it's released, what will happen is, if it's a bullish number, it will come back as if it's going low and give this massive pin for liquidity, and then everyone will enter sales like, oh, it's melting, and then instantly the next candle will just go like that, bang, 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 fuck off, and it will just fly, right? Because it's positive data. Employment change, we want to see that. Unemployment rate, we want to see that. Yeah, so there's a fair bit of news next week that we want to see, okay? So, based on that, I'm going to be putting AUD is, I'm going to keep it in strong, and NZD is going to remain in weak. So that's AUD strong, NZD weak, because it's just a really shit economy. However, as I said last week, I say it in all my videos, right? Because we're in a risk-off market sentiment right now, you may look at a pair which is like NZD USD, and it's going up, and you're like, well, Ryan said NZD was a weak economy. Why is it going up then? Well, it's because of the market sentiment. It's to do with people. It's to do with cash flow, risk on, risk off, right? So people will be moving their money out of USD, riskier assets, and putting it into safe haven assets, NZD, CHF, gold, silver, and Japanese yen, okay? So if it's risk off, you may see NZD going up, but the economy is weak, so you want to let it go up and wait for the market to switch back to risk on, then you want to trade against it, right? You want to sell it and buy whatever the opposite pair is against that, right? That's what you want to do. So, this is how you play it. Yeah, okay, moving on. Sorry. It goes much quicker now that I'm only going to go through each individual pair. So Canada, I already know Canada's shit. I already know it's weak, but we're just going to have a look. So next week, we've got a fair bit of news we want to see. Unemployment rate, IV. Yeah, that's all anticipated to come in lower. Yeah, overnight rate is the same. Bearish. Yeah, shit. So Canada is going to remain in weak. However, with Canada, what we have to take into consideration just now is it also may get some strength. We need to look at oil. Now, you're going to look at this and be like, oh, oil's bullish. It ain't bullish yet. Yes, it's been bullish here. Obviously, if you're a scalp trader or something, yes. But look, right? That ain't fucking bullish. That ain't fucking bullish, alright? Yes, if you're a day trader, scalp trader, whatever, it's going bullish at that present time. However, look where it's coming to. Look, boom, coming to this area potentially, boom, and melt. I would like to see it come up a little bit higher, in all honesty, but previous support, once broken, becomes the new resistance. So we're potentially going to see it come down. I think it could even come to here, which is going to make people go, fucking hell, it's massively bullish. It ain't massively bullish. It's simply a liquidity grab, because the minute Trump starts flooding the market with Venezuela's oil, the price of oil is going to be cheap as fuck. If it's cheap as fuck, it's going to be a way down here, like this. However, people don't want to be selling it here. They want better value. So what happens? Markets have to come up first, so you can start selling it here. I ain't taking buys because I'm going to wait for the sell, right? I'm just going to ignore it. So obviously remember to look at the higher time frames. However, because of this going slightly bullish, you may look across at the Canadian dollar right now and be like, why is that going bullish? Well, that's why. It's because the price of oil is going up. If oil goes up, the Canadian dollar gets this little strength. It's like a false strength. And if it goes down, it comes down. It gets weaker, okay? So just bear that in mind. Overall, the Canadian economy is shit. Employment change, unemployment rate. CHF we don't look at, but I just instantly put CHF in neutral. Let's have a look. Euro. Same bullish. Slightly bullish. Bullish. Bearish. Bullish, bearish, 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 bullish, bearish, bearish, bullish, 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 bullish. So fairly mixed data there, right? It's a little bit more bullish, but nothing crazy. This week coming, we've got tons of news. PMIs, CPIs, PMI again. Main refinancing rate, it's going to be the same. Yeah, so for me, I'm keeping... So like I said last week, right? Excuse me. I'm keeping Euro in neutral, but in my mind I know that it's a weak bullish, okay? Same with pound. I'm putting pound in neutral, but I know it's weak bullish, okay? And I'm pretty sure actually Prime Market Terminal has the same. Let me just find this for you here. Is it under swing trading? No, let's have a look. Is it PPT? Where the hell is it again? Let me just move this out of the way. Let me... Where is it again? Let me think what one I'm looking for here. Oh, here it is, sorry. I'm I'm fucking looking right at it. No, it's not this one. Shit. That's just gold. Market. Stock heat map. No. Where the hell is it? It's not that one. It's not this. Let's see if it is this. Nah, it's not. Where the hell is it? See, because they've moved everything around, I fucking can't remember where it is. Test. However, it is good to show you. That's why I'm going to look for it. Euro USD. COT. Let's have a look at COT. Is it that? Oh, wait there. Oh, that's just Euro USD. Okay. Expand. Yeah, okay. It's not that one. It looks like that. That's why it's confusing. Where the hell is it? Swing trading. Let's see if it's in that. Oh, is it this one? Yes, here we are. Okay, good. So look, USD bearish, Euro weak bullish. You see, GBP weak bullish, CAD weak bearish, AUD bullish, NZD bullish. That's because of the risk off sentiment, okay? It's not because of fundamentals. Japanese yen neutral and CHF weak bearish. We're currently in AUD CHF buys, right, for the long term. So just wanted to show you that there. If you can't be bothered going through this every week and working out which economies are strong, which economies are weak, then just fucking go down to the description here, buy PNT, and it will fucking tell you. Bearish, bullish, blah, 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 okay? Yep, Euro, as I said, I've got Euro down as neutral, but I know in my mind it's a weak bullish, okay? This week we've got a couple of CPI, flash GDP, blah, blah, blah. Okay, that's fine, moving on. GBP. BRC retail sales. In fact, no, where am I here? I'm way back. What's this? Bullish, bearish, bearish, bearish. So yeah. This week we have got. I'm going to keep the rates the same. Official bank rate. We're looking to keep it the same. Final manufacturing nationwide. We've got a couple of little bits of news we want to see, but nothing major. Okay, so I'm also going to be keeping GBP in neutral, but the same as Euro. I know that in my mind it's weak bullish. Okay, Japanese yen. I already know I'm putting that in weak. However, we have to remember it may show signs of strength, and that's because of risk off sentiment. Okay, it's not real strength. Excuse me. 2.6, 1.9 consumer confidence. Let's have a look. That's okay. Bearish, bearish, bullish, bearish, bullish, bearish, bearish. Yeah, still. I mean, it's getting bullish because it's increasing, but it's still minus, right? So it's shit. The economy shit. BOG. Next week, we've got final manufacturing. That's pretty much it. We don't really have a lot that we care about, okay? So for me, Japanese yen is still weak. USD. Right, let's have a look. Bullish, bullish, bearish, bullish, bullish, bearish, bearish, bearish. Oh no, we don't care about that, sorry. Rates, federal rates are the same. There's no rate cut. Bullish, bearish, bullish, bearish, bearish, bullish, bullish, no. Bullish, bullish, bullish. So, this is the opposite. I'm going to keep USD in strong because overall the economy is quite strong, right? However, it may show weakness, or it may look weakness on the lower time frames as if it's melting, right? And that's because of the market sentiment, risk off. People are just not wanting to take risk in the USD economy right now, which when it comes to risk off and USD is pulling back down, all they're really doing is getting the market into an area of good value. It will switch at some point and start to fly again. My prediction for USD, if we have a look at the index, what the hell is it? Oh, here it is, sorry. If you look on the DXY, I've already got it down to, look, here's one of my areas right here, and here's another area. It could, come down to around 92, 89 mark, or it could just, bounce here and go. But there's a high chance it could push even further down to this zone here and down to this zone here, all right? So let's wait and see what happens. But so overall, the economy is strong. However, we are in risk-off sentiment. Risk off essentially means people will be moving their money out of the US because they don't want to take risk on it and putting it into safe haven currencies: Japanese yen, Swiss franc, NZD, gold, and so on. All right. So that's pretty much it. Yes, so just to summarise, I have got strong AUD, USD, but we have to remember market sentiment. So I personally would not be buying USD right now, okay? Even though I've got it in strong, I wouldn't be buying it right now. Weak, NZD, CAD, Japanese yen. Neutral, CHF, Euro, GBP, okay? And that is it. Look, we're already at 35 minutes, guys. I'm not going to bother with markups. I'll fly, in fact, you know what, fuck it, I'll fly through them. Right. Here's the zones we've got here. It's in a weekly time frame. Yeah, I wouldn't be taking that. I'm already in this, so potentially, I mean, you could really move this. This is the next potential zone right here, which I guess you could move this like that. There we go. Boom. There's still nothing that I would enter right now. AUD, USD, I still wouldn't enter it right now. Euro AUD, potentially a buy zone, but the AUD for me right now is still stronger than Euro, so you might get a pullback and drop, or you might get a breakthrough, pullback and drop. Excuse me. I mean, look, even though this is played out, right, I wouldn't have taken this. I probably said it when I called it. Look, even though I called this out, I wouldn't have taken that sell because you're going to be selling at an all-time low. Why would you do that, right? I just wouldn't do it. Yeah, let's go to the daily. Euro NZD, Euro USD, yes, nothing that I would take, guys. Look, you know, I've got some markups there if you want to copy them, but nothing that I'd really take. USD CAD. Look, we could see it bounce up from here, right? See, this is a prime example of what people do that don't base it on fundamentals, right? They'll draw a line like this, and they'll be like, "Oh, it's fucking broke my line. It's gonna melt. It's gonna melt." They'll enter sells, right? Because it's broke this stupid fucking line here. It'll come back up. It'll come back down, retest an area of value, and then absolutely fucking fly. And they'll be like, "Why did that happen? It's broke my line." You know, it's because the lines aren't how, you know, aren't a reason to decide whether you're going to take a buy or a sell. It has to be fundamentals is what makes the markets move. And these type of lines here, these are your signals for where you're going to enter or exit the market, right? Sometimes you get them, look, sometimes don't play. We entered the buy here just to take it when it came back down. We entered the buy here and it just broke down. It's just simply a losing trade. That's absolutely fine. There's nothing wrong with that. But however, if I saw this set up 100 times over, I would still take that trade 100 times over, right? Because it works fucking loads of the times. You are going to get losing trades. So it's an important thing when you're a new trader where you're like, right, this is my setup. All right, I'm going to take a buy. You take a buy and it goes against your sell. You can't just go like that. Oh, fucking hell, that strategy doesn't work. That shit. You just had a losing trade. The strategy is fucking brilliant, you know? And you have to remember, each trade is independent of its own. So when you go to place a new trade, don't look back in an old one and be like, fuck, I took this last time and it never worked. Because what will happen is you won't take it this time and it'll go like, bash, bash, bosh, and it'll fly. And you'll be like, fucking you should have took that. And you'll just keep changing your mind every 2 seconds, right? So just stick to your strategy. What people say is, plan the trade, trade your plan, right? Plan out the trade, right? If it hits here, I'm going to do this. And when it hits there, you then trade that plan. You take the fucking trade. So, I mean, look at this. Push, bash, bash, bosh. I mean, it has hit, you know, one of our zones. Small candle, large engulfing, breaks away, comes back, retests, rejects, and goes. But, yeah, in the higher time frames, it really doesn't look very good to me. So, gold. Oof, look at that. So I've got these areas lined up for gold. We can remove this now because it's fucking blasted through that. Silver. Oof, look at silver. So I've got another couple of areas here on silver to look at. Same with copper. Copper melteruni. I'm looking to buy it. Now I'm just looking to buy these. I'm not getting involved in the sales. I'm just waiting for it to come back down and hit these lower zones, and I'm going to be waiting for the buy. So this is what we talk about, having the sniper mindset, waiting for it. When it comes into your area, bang, you take the shot, right? And that's pretty much it, guys. So yeah, 40 minutes. I'll leave you to it. I'm Ryan Mack. This is Trading, guys. Thank you for watching. If you find these videos useful, down below this video in the description, you will see a link at the very bottom of the description for Prime Market Terminal. If you want to buy it, be my guest. When you click on the link, the discount is already included in that link, right? It's like 15% off or something. If you want mentorship, look, you can jump across. We have a full Discord here. Whenever I take trades, there we go, I give the signals in here. My business partner Lee, because I do swing trades, but my business partner Lee, he does scalps. Here's the guys in the group. Look, Jeff, up 889 quid, right? Bearing in mind, we charge £97 a month. He's just made £889 in one trade. Anthony has just made £5,686 in one trade, right? So this is what we offer in the group. Copy all of our trades. There's even more. There's Elliot, 1,355. Anthony again, 1,233. Right? If you want a mentorship and you want to make money, jump across, okay? Don't be crying about, it's £97 a month. Once you get the hang of it and you get the mentorship, you'll make that money back, 10 a penny, okay? So thanks again for watching, guys. Much love. Have a great week up ahead. Be safe. Don't overtrade. Don't over risk. If you see your setup, take it. If you don't see your setup, don't fucking take it. Sit on your hands, okay? Take care. Bye-bye.